Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as I speak to all of you all this Monday morning at around about 11:30 a.m., markets have shown a little bit of resilience and currently trading with a positive tick. To give you the levels on Sensex, Nifty Bank, Rupee Dollar and crude oil, well, the Sensex is up about 240 points. Level is 65,190. Nifty is above about 60 odd points. 19,370 is the level on Nifty spot. Bank Nifty up about 180 odd points. 44,030 is the level on Bank Nifty or Nifty Bank. Rupee dollar equation, a little bit of concern. We have crossed 83 rupees to a dollar mark, and the level is currently 83.10. Weakness definitely there, and this is a concern. Along with the crude oil prices, Brent is trading at about $85.50 to a barrel, and NYMEX is trading at about $82 a barrel. Both these equations are a little bit disturbing from short to medium term. That is weak rupee and higher crude oil prices. This could possibly play an overhang along with a couple of other factors. So, what are those other factors? Well, inflation, deficit, monsoon, and the second part of the monsoon season, especially in some states like Kerala, Maharashtra, and other states. There are fears of food inflation going up, which is currently also at an elevated level. And that was exactly what was said in the credit policy by the Honorable Governor also. Other than that, news flows from China. Uh, this is a big concern because the kind of overhang that it has on in the emerging market, and along with that, the US data. So, one too many overhangs on the market in the immediate short to medium term. Let's hope that there is some amount of catch up from the data as far as monsoon is concerned, and hoping that there would be a little bit of sign of relief as far as rupee dollar equation and crude oil prices are concerned. But our estimates tell us that it's not going to be anytime soon wherein you will see strength coming into the rupee. We may possibly trade at an elevated level for the next couple of days. And on the crude oil prices also in the international market, there are no suggestive data which tells us that we could see a sizable cool off in the crude oil prices. So we will have to live with this elevated prices, and this can create an overhang on the markets. Having said that, friends, I think over the last 2 weeks or fortnight that we have been sharing our market outlook, we have maintained that it's a consolidation period for the markets, and you will see further consolidation, which may last for a couple of more days before we see any kind of stable upside coming through. And the levels that we mentioned last time also, we are maintaining those levels. 19,200, 19,300 on the lower side is where we see some buying coming in. And 19,500 and 600 are the levels wherein we feel a little bit of top heavy. So our sense is that even for this week and the next couple of days, we would be possibly trading in this zone, trying to, make a base building kind of a case. And then possibly you might see a little bit of move on the upside. But immediate breakdown or break out between these two levels of 19,200, 300 on the lower side and 19,500, 600 on the upside looks difficult, depending upon, of course, what the news flow is on the domestic front, as well as what news flows we get from the overseas market. So, in this brief period of consolidation where the markets are, you may get sector specific, stock specific moves, which may possibly take some stocks on the higher level, depending upon the news flow again, and possibly some pressure in case of that news flow is on the negative side. So, if you will see this stock specific moves in an otherwise range bound market. In this kind of a scenario, we always share two investment ideas. We have two more this week. First one is from the infrastructure space, a company called Dilip Buildcon. The numbers were good enough, and we have maintained our buy recommendation on Dilip Buildcon from a long-term point of view. Fundamentally, buy coverage, of course, this is. And remember one thing: infrastructure, capital goods, defense. These are some of the sectors wherein the order book takes time to translate into revenues, adding into top line and bottom line. So you need to have a longish time horizon compared to other sectors in the market. The second one is from the public sector bank space, and this also, the coverage was there earlier, but post the result and the kind of numbers that Bank of Baroda is the stock we are talking about. The targets that we had placed, we have moved it upwards. So it's necessary to speak on both these names since the earning was good and we have maintained a positive view. Mind you, friends, these both stock recommendations are from a long-term time horizon, and you need to have 1.5 year plus kind of time horizon. And needless to say, we are in a consolidation zone for the markets, like we mentioned earlier. You will get opportunities, but start accumulating these stocks and add-on dips would be a perfect strategy in case if you decide to invest in both these stocks. From the markets front, I think we'll have to be a little bit more patient, given the fact that we seen a fantastic rally in the month of July. We need to give it to the market to possibly take some rest, have a breather, consolidate for some time, make a base building exercise so that the next move upwards will be a durable one and we'll possibly have the strength to go and cross over to the all-time highs that we made. It may not be immediately, but it will be a brief period of consolidation. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye-bye.